Ready?
All right. So today I'm here with Matt. He has over a decade of experience looking for real data-backed investment opportunities in fintech and beyond. Previously, he served as chief data scientist at Third Point, where he built the analytic engines that shaped investment direction for a multi-billion dollar hedge funds. He's also worked at World building large-scale strategies with alternative data long before it was a headline material. His experience sits right at the intersection of practical financial markets and deep analytics. He believes in finding entrepreneurs and technologies that bring fresh, rigorous, effective approaches and solve real-life market problems. Right, Matt. So my first question to you is, having built analytic engines for a big fund, what is the single biggest difference in how you assess value and risk now compared to your previous experience working with those big funds?
Listen, I think with any big funds and just big organizations in general, you have a lot more politics, a lot more people at the table, and so things tend to move a little bit slower and a lot more buy-in around culture. And I think also with a lot of large funds, you have to assess what are the real goals. A lot of hedge funds really only have a 1 year outlook, whereas I think in the venture space, our funds are 10-year funds. We are investing for the long run, and so we can kind of look out 10 years when we're not only making investments but also just thinking about what we're building internally. So I think it's the longer term nature and getting to think uh, multiple years at a time versus the next 6 months.
And what benefit does it give you that you can think in terms of 10 years ahead?
I think it allows us to take bets on the right people that are trying to solve difficult problems that may not see huge results right away, but that know that it's going to take a long time to get there. I think also, you know, we can start to work with earlier stage companies because whether we're using that internally for our own build out or investing in these companies, you know we don't need to see the results right away. So gives us
Mm-hmm.
a lot more opportunity
And
to
on
be selective.
Mm-hmm. All right. And on the other hand, what are the problems with the short-term thinking, going only thinking about the next quarter or next year?
Short term thinking, short term results. I think it's just like being in the public markets. You're always have to please the investors, the sell side, with quarterly results, meeting your guidance and analyst expectations, but also giving them enough excitement and that drip of information to keep your eyes on the stock and keep everybody excited about where the stock is going. And obviously, when you're private, you don't have to. You obviously have board meetings, but you're not under the public watch and the public eye, and you're not as susceptible to the day-to-day swings.
All right. So you said that you are working with a lot of data. What, in your opinion, is one simple, not obvious data source that is overlooked?
I think I'll talk about a company in our portfolio, Fiscal.ai. I think
Mm-hmm.
fundamental data is been around for a long time. It's boring. Every public company files their earnings, and you can look through their income statement and balance sheet and cash flows. I think it's a boring data set. There's a lot of access to it that's free and cheap, but I think building a high quality, not only US, but global fundamental data asset is extremely valuable. And I think that how you structure that, how you build KPIs, and how you deliver that, I think that can be, a multi-billion-dollar opportunity. And we've seen, companies over the years like SNL that S&P bought for a few $1 billion. And I think what Fiscal is doing, leveraging modern AI technology to create a global fundamental data asset is pretty exciting, even if it's maybe boring to the broader world.
Mm-hmm. So recently there has been a big optimism, especially on the US market. Do you think currently more opportunities lie abroad?
I think that opportunities are global. I don't think it's just US. We
Mm-hmm.
invest across US and Canada, but companies are selling globally. So I think that the opportunities are everywhere. We focus for us more on in and around where we live and where we have expertise and where we understand the local laws. But there's definitely a global opportunity.
Mm-hmm. Right. So on the stock market and in business, there are many different ways of investing, many different positions, many different opportunities. How do you pick the best ones? What do you look for to find some anomaly that will give you better than average returns?
And I think for us on the venture side, we're focused on the fintech markets. We're value
Mm-hmm.
oriented, and we want to, find companies with big ideas that, what we consider fair valuations. I think in the public markets, I tend to invest in what I know and
Mm-hmm.
companies that I think are, long term winners. I'm excited about what Robinhood is doing. I think that they've got
Mm-hmm.
tremendous upside over the next 10 years, and it seems like they're, like I've read something where they have 11 business units now that are doing over 100 million in revenue. And so if you think about the opportunities in prediction markets and wealth management areas we really focus, I'm excited about that. And then, my partner Howard always talks about the degenerate economy and just everything that's happening around investing and trading and data and AI. And so, whether that's Google or Apple or other companies, I still think the strong are getting stronger over the long term.
Mm-hmm. Right. So you mentioned Robinhood, and when picking a company, maybe a stock market company, personally, would you focus more on quality of that company or on the current price? Because, for instance, there are
I'm more of
companies
a
like
focus.
PayPal, right, that are have big problems with concurrency with other companies eating into their revenues, but the price is very low. Would you be interested in that, or would you rather look for something pure quality?
I'm more of a pure quality. I think that listen, I think price matters here and there, but I don't
Mm-hmm.
get caught in buying something just because it looks cheap. I think that catalysts are important. So, there was a
Mm-hmm.
long time where Chipotle was really cheap after they had, issues with outbreaks in their food and
Mm-hmm.
so forth. So, like, I think from a catalyst perspective, it always interests me to buy into companies when there's a downturn. I think CrowdStrike, when they had like the outage and everything, um, was a good entry point. But otherwise, I'm more focused on the long term. But entry points are obviously important.
Mm-hmm. You work with fintech. Do you see a lot of cryptocurrencies being incorporated into that businesses?
I think crypto is having its moment when it comes to use cases. I think obviously stable coins have a big opportunity. I still think, from my perspective,
Mm-hmm.
we're not doing it in the private markets, but in the public markets, between Robinhood and Coinbase, those are the two easiest ways to play crypto overall. And I still think that Robinhood is outperforming Coinbase when it comes to like the real opportunity. I think we'll see more crypto companies and crypto focused firms go public in the next few years. And so it'll be interesting to watch where that opportunity lands.
So currently in the market, there is a lot of data. It's saturated with it. There is a lot of noise. What is your framework for combining fundamental analysis with deep analytics to truly identify a long-term value investment?
Listen, I think for me, I focus on companies that I think, qualitatively are building something interesting, and also companies that I understand and enjoy following. We've talked Robinhood. I follow the
Mhm.
data and information services companies and exchanges like ICE and NASDAQ, S&P and Verisk and FactSet. I think you take those names and you do a screening to see, companies that are breaking out to all-time new highs, like you said, companies where their prices in the gutter.
Mhm.
I think those for me are ways of watching, like, is there a catalyst or some sort of event that's going to,
Mhm.
help them really, like, grow one way or another. I think, obviously the new crypto bill didn't happen. Robinhood, took a bit of a downturn from that. One could argue that that's either an opportunity to invest and buy more shares right now, or maybe a pause to see if it goes down even more. I think in the data and information services world, I think with AI, S&P and Moody's and a few others are seeing the benefits of that, while as FactSet, there's a lot of questions on, is this potentially disruptive for their business and what are they going to do about it? And so their stock hasn't performed as well.
Mhm. Do you think that AI will boost the real economy so much, the earnings and financials of S&P 500 companies catch up to the rising price?
I think so. I'm not worried about the valuations or price. I think AI is similar to cloud, where I think it's transformational technology, and I think we will see real winners. Um, I definitely think that there will be disruption for a lot of companies as well, but I don't think that in the public markets, the demand has been there, and there's even more demand coming. So
Mhm.
I'm not overly concerned with at least the companies that I follow, where their valuations are sitting.
And do you think that the demand for AI is coming because this is the new hot topics that every investor wants to have a company that does something with the AI, or will it really boost profits of the companies? And what sectors can benefit most from AI?
I mean, yes, I think that is going to boost profits. I think we're going to be able to do more with less. I think efficiencies are going to be tremendous. I mean, for areas that I look at, I think, data and information services companies, everybody wants to buy more data. And I think with AI, we can have a lot less headcount. So if you needed thousands of people to do things previously, I think you can do that with a lot less. So that's good for everybody in the data and information services world that, kind of jumps into that opportunity. I think, listen, the big tech companies are only getting stronger. I think Apple and Google have both played this really well. I think, with all of this, use of data and AI, and the more we're going online and global, I think cybersecurity is a big issue, and so CrowdStrike is sitting in a great opportunity to benefit from this. Um, and just the cloud infrastructure in general. I mean, more AI usage, more cloud. So obviously, Microsoft and Amazon have a great opportunity. So I I'm excited about where AI is taking us. I think we're seeing a lot of private companies that we might see come public soon, and so um, it'll be fun to see who makes it public here in 2026.
AI also uses a lot of energy, although stocks in the US from the energy sector are quite beaten down. What do you think will happen into the future?
Yeah, I won't say that I'm an energy expert, but I will say I think there's a ton of demand for energy. There's a ton of nuclear investment happening. Every company from Meta to OpenAI are building alternative capabilities in energy. So I think
Mm-hmm.
I don't have a particular insight into where all these energy stocks will go, but it definitely seems like we have more demand than supply.
Also, with the recent happenings in Venezuela, with Trump talking to big oil companies, do you think they will go in and increase the oil production there?
I think with the changes going on in Venezuela, it's only positive for access to oil. I think it's inevitable that U.S. companies will go in there, from Exxon to Chevron and everything. But
Mm-hmm.
I don't have an insight into the local politics in Venezuela and what still needs to be done from a military perspective to make that a safe environment. But it does seem like we're leaning towards a good direction in terms of opening up the energy and oil capabilities of Venezuela for the rest of the world.
Mm-hmm. Yeah, that's for sure. Although it is risky because a lot of
Yes.
investments in the oil are very long term, and then we need to protect their operations in Venezuela for a long, long time. And if we look at it historically, for instance, in 1976, I think the there was a big shift, and the Venezuela government basically kicked out the U.S. oil companies. So there are some fears connected to that, that it might happen again, and the oil companies are asking the government to provide either big military support in the region, or also that they put money for the investment in that region. Do you think that will happen, that the government will further support the operations in Venezuela of those companies?
Honestly, I don't know. I think they want to see the companies go in there, but in terms of making guarantees, that doesn't seem like something the government could
Mm-hmm.
do. Or even if they do that, what would change if there's a new administration? So I would say
Mm-hmm.
it's a tough one to say.
Exactly. Yeah, it's a very, very complicated sector, especially that it's abroad. All of the different countries are involved. Of course, Russia and China are also looking closely on it. It also involves all of the OPEC countries as more drilling, like Trump likes to say, drill, baby, drill. It lowers the oil price, which is not good for all of the major producers. But oil is still very important. We have this change toward more renewable energy sources, solar, wind, etc. But still, around 90% of the energy is still produced with fossil fuels. So that would be also important if the AI technology grows and becomes more important and needs more and more energy. So you also worked with starting your own businesses in the startup sector. What, in your opinion, is um, a lesson that fundamentally change how you think about markets or technology?
I think lessons for us is we're early stage investors, so I think we take our experiences in public markets and working in them and having gone through cycles to think about how hard it is to get an early stage company all the way to the finish line. The firm has obviously
Mm-hmm.
seen companies over the years go public, but we've also seen M&A and downturns and companies that don't make it. So I think what you really learn is that it comes down to the people. When you're investing at a very early stage, it's what makes these people tick. Why are they building what they're building? What are they excited about? And what type of adversity have they gone through on their own that will allow them to deal with the ups and downs of starting a company and being a founder.
Mm-hmm. What do you think about focus? Do you prefer a company that is focused on one thing, or a company that is diversified into few products and services?
I mean, we're early stage investors at the very beginning, typically
Mm-hmm.
first check from an institution perspective. So I like to see focus. You shouldn't have to have multiple products at the very beginning to figure out success. And so I'd rather really focus and not get distracted than have too many things going on at the beginning.
Mm-hmm. I also wanted to ask you about technologies that big funds use. Um, is there a certain technology that you think is really great in order to like analyze data or beat a market?
To analyze data in the data market, is there a certain technology that funds are using? Is that what you
Hmm.
said?
Yeah, and what technologies do they use, big funds, to try and outperform?
I mean, I think that's a complicated, long answer and depends on the strategy, both
Mm-hmm.
from a hedge fund or a venture perspective. I think, you know, speed of if you're quantitative or if you're long short traditional, I mean, I think we're using, all of the mainstream tools of FactSets and Bloomberg's and S&P to, the more modern tools like AlphaSense and the APIs that Fiscal has built to a lot of the expert networks. I think on the venture side, it's a lot more about how do you automate a lot of the work that you're doing around,
Mm-hmm.
analyzing companies. There's tools out there to find companies. I think, you know, a lot of firms were using this for a long time, and I think it's only becoming more prominent that I think everybody's doing some sort of web scraping and collecting data off the internet and
Mm-hmm.
organizing that. And I think if you're doing that for a long enough time period, you can build a really valuable moat around data assets,
Mm-hmm.
especially if you've been keeping that point in time from the internet. So, no, listen, I think what's exciting about the tools that all these investment funds use is that creates an entire suite of companies to invest in from the private markets perspective. So, we invest in a lot of capital markets and investment tools. So, like, you know, it's a great area to deploy capital.
Mm-hmm. Right, so all of those funds, all of those big investment banks, they have a huge amount of resources and people to work and try to beat the market. Do you think an average person should invest their market alone, or should they use help of a professional?
I mean, I think the average person should be doing direct indexing, and I think that there's a great opportunity to work with wealth managers. We invest in wealth tech companies. We have a lot of RIAs and wealth managers as LPs, and I think that wealth managers can bring a ton of value to everyday
Mm-hmm.
investors. And then I think you can do direct indexing with an advisor or use a company like Freck, which we're investors in, to do direct indexing on your own. And like it's great to pick stocks and have your own investment strategy and trade and do whatever you like on Robinhood. But I think like that should only be a portion of your portfolio.
Mm-hmm. Mm-hmm. I agree. And what do you think about timing the market? Do you think a regular investor can pick a good time to go onto the market, or are they doomed to go during times of optimism while the prices are high?
I don't think anybody should be timing the market. I mean, listen, I think you should be sitting on cash to deploy when there are events that happen to find
Mm-hmm.
dislocation, right? Like obviously
Mm-hmm.
there was times during COVID and there was times when the market gets punched and you can buy low but I think that the reality is you should be invested and not worry about what happens to your portfolio on a daily basis.
Mm-hmm. And what do you think about different styles of analysis? Do you prefer fundamental, or do you think also technical analysis has opportunity to make money, or do you think maybe it's best to combine both of them?
I mean, listen, I think everybody has their own style, which makes them excited. I'm not a technical analysis guy. I'll look at the charts. Um, I believe in fundamental analysis, but for a long term perspective, I think it's hard to just go off of fundamentals without some sort of catalyst as to why now.
Mm-hmm, mm-hmm.
And I think like the average person should, be direct indexing and then, picking winners that they like both long term and short term.
All right. I would also like to ask you about the most recent interesting project that you have been working on.
I mean, the most interesting thing for us recently is we closed the fundraise for our Fund Five. So we're
Mm-hmm.
raised another 85 million to
Wow.
continue to invest in seed stage companies. Fintech and vertical AI have always been our focus. That's where the majority of our investments will stay. I think for me, I'm on the more financial services fintech side is where I focus. So that and data companies, and I'll continue to be excited about technology in and around wealth management, data and compliance, and anything that's disrupting and building something new in the investment management and capital market space.
All right, great. And at the end, I would like to ask you, where can our listeners find more information about you?
Yeah, you can find me on LinkedIn. I'm pretty active there, both sharing things that's happening for our companies and things that I'm thinking about. I write my own newsletter, mattober.co. It's called The Roll Up, and socialleverage.com is our firm. You can contact us there and find us. And we're, we write pretty regularly, both newsletter for the fund, but also a few of us individually.
Mm-hmm. Oh, that's great. And what is the newsletter about?
Social Leverage's newsletter talks about companies in and around our portfolio, and
Mm-hmm.
some of the things we're looking at. My personal newsletter is more focused on the financial services and fintech, data and technology space. So things that you know kind of affect me from my time at hedge funds to what I'm looking at on the venture side, and things that excite me.
Okay. No, that's really, really good. I will for sure look into that. Have a good source of information from an expert. Okay, Matt,
Yes, thank you.
thank you for the podcast. That's all for today. It was really great meeting you. And yeah, I wish you all the best in business.
Thank you so much.
Thank you so much.